Welcome to the daily update, where I'll go over the action in the market for Monday, December 23rd, and we'll see how things look for Tuesday, December 24th. We're seeing an improvement. We're seeing some potential positive setups, but we're not seeing enough follow through yet to really switch over to positive. We're still negative in the short term because we're below the 20 period moving average and we're bouncing from an oversold condition. We're turning back more positive in the intermediate term because we were able to get further above the 50-day moving average. We're still positive in the long term. Now, on Tuesday, the market's going to close early at 1 p.m. Eastern Time, and then it will be closed on Wednesday for Christmas. We'll come back on Thursday, and you can expect volume to really drop off. But at the same time, on December 24th is officially the start of the Santa Claus rally that goes through the 5 last days of the trading year and the first 2 days of the next year. We'll have to see if things work out this way. Back in 2018, we had a pretty severe decline on Christmas Eve, so it doesn't automatically mean that things will be positive. And the market is still looking vulnerable after last week, especially that down day. That really switched things back over to negative. So we want to be really careful and not just assume that the market's going to go up. First of all, I want to extend a very Merry Christmas to all of you. I appreciate you watching the videos. I hope you find them helpful. And this was actually made by one of my students. I teach English online to Chinese children, and a number of pictures were sent to me, and I really like this one, and I wanted to share it with you. So I hope you have a very Merry Christmas. Also, it's coming up to the end of 2024. There's still a few days left. Please feel free to check out the SPX Investing Program and see if that's of interest to you. There's a link that will take you to the website or to a video. You can email me with any questions. And one thing that you get is, even being a free member, is early access to the videos. I'm going to be changing all of that in 2025. So for right now, it's like an open house. Just feel free to check things out, and I'll be adding a lot more things after the beginning of the year. Also, the daily video is the real foundation of the analysis that I do. I know I go through a lot of charts, my videos are longer. That's all by design, because this is how we can see these incremental little changes, either positive or negative, that are coming into the market, and we can develop foresight and actually see things and say, okay, if this happens, things are going to turn more positive. If that happens, things are going to turn more negative. They don't always play out that way, but it just gives us things to watch instead of just blindly saying, okay, I think the market's going up or down. We actually put some logic into the whole equation. Okay, let's talk about what happened. We had a lower open. The futures had been positive, and then as we got closer to the open, we drifted down and were virtually unchanged and actually went negative. And so that led to the lower open. And we set the intraday low at the daily pivot at 59.15. So we held above the 5,900 level. That's one thing that I was watching. If we had continued to decline, was that 5,900 level going to hold? And we never even got down that far. Then we were able to climb back above the unchanged level. We went from negative to positive, and we got up to the 59.50 level. Then prices declined, and now we found support at the 59.50 level, and you'll find that quite a bit. These round numbers, numbers that work as plateaus or resistance or support, that's what happened on Monday. So we hit 59.50, and then we climbed to close at the intraday high. So that in and of itself is positive. We were up 0.73% on below average volume. And don't be surprised if that's what we see for this entire week and probably next week as well as we head into New Year's. We are still negative in the short term. We're turning back and improving in the intermediate term. So basing it around a moving average, we're positive. But some of our indicators, although they're showing signs of looking better, they haven't actually turned over positive yet. We're still positive in the long term. Interest rates keep going up, and stocks ended up going up as well. Usually lately, anyway, they've been going in opposite directions. There's a whole lot of geopolitical things going on, and of course, we have the holidays coming up, and who knows if something crazy is going to happen there, but for the most part, the market's really been ignoring all these different things that are happening. So we'll just kind of see if that continues. Okay, some comments. Mega caps had another pretty good day. And this is helping the overall market. This is why the indexes are showing signs of improvement. The semiconductors also bounced. This has been an area I've really been focused on lately because they are such a huge part of the tech sector, and the tech sector is a huge part of the overall market. And the VIX continues to drop. We're under that 20 level and still falling. And that's when we get the positive annualized return. So that's improving as well. We do have a confirmed Hindenburg moment. There was not another spike. I'll show you that chart right at the end of the video. It's still there and it lasts for about 30 days after we saw the confirmation. So we'll just keep an eye on that. On the short-term list, it's really getting a lot smaller now. We still are extreme negative with the 20 period exponential moving average. The CCI 14 has fallen off, but the CCI 20 is still there, and our 20 period simple moving average steady. So this is showing signs of improvement as well. In the intermediate term, we're still looking negative with the advanced decline ratio, the PMO studies, and the 50 period simple moving average study. Excuse me. And then the current scenario hasn't changed. This was modified last week where the Fed did come in and cut rates 25 basis points or a quarter of a percent. But now it's pretty much accepted that they will pause rate cuts. And they've also increased their outlook for inflation. And that's what spooked the markets last week. The dollar was up and interest rates were also up. We're getting up to that 4.6 level now with the 10-year yield, where after Friday we had been at 4.42%. We're ticking up a little bit. We've gone from extreme negative to more negative now. So at least the context is changing back a little bit positive since we're going higher. We had been at 28. After Monday, we were at 30. We're still negative with our trend because the red line's above the green line, and the ADX is coming right down to its moving average on both the short and intermediate term chart that I'll show you later on. We're still above 20, so it's still a trending environment. And with the up day, our bias is positive, and I've changed our momentum. It's more negative in the background to mixed because we are seeing some signs of improvement here. So we did get some economic reports that came out. Durable goods orders were down 1.1%. That's greater than the minus 0.3% they thought. And last time they were up 0.8%. When you take out transportation, down 0.1%. They expected them to be up 0.3%. Last time it was up 0.2%. Consumer confidence came down. It was at 104.7. They expected 113.5. Last time we had this reading, it was at 112.8. New home sales, a little weaker than expected, 664,000. They expected 670,000, but up from the 627,000 we saw last time. Okay, here are some charts. Durable goods orders on a year-over-year basis are above zero and showing an improvement. Then we take out aircraft, and we're still above zero and showing an improvement here. And then on a month-over-month basis, we had been negative for the last few months, and we've been ticking back up and actually positive when we look at it this way. Consumer confidence, the blue line is total, and that actually came down a little bit, where we've been kind of going sideways here, up a little, down a little, depending on what mood folks are in. And then how people are feeling right now is the purple line, where it ticked down a little bit, and then expectations looking out into the future. This is also declining too, as there's some pessimism coming back in. New home sales are going back up, but we've been pretty range bound lately here. We get to the high end of the range and then drop down. Now we've been coming back up to the top end of this recent range. Then the 3-month average of home prices still getting right up to that zero level. So that's been really tapering off there. And Isabel Net blog charts, all-time highs for an average equity allocation. This is what is it Goldman Sachs? Cross Asset Research. Okay, never heard of them, but they're just projecting out here that most folks are putting their money into stocks, and that's really what this chart bears out here. And then weak breath might not be a bad thing. I blew this up down here. I know it's still fuzzy. I do the best I can to try to make this a little more clear, and it just doesn't work out. But these are the times, the green diamonds here, when we had really weak breath, and then what happened after that. And 1 month out, we're up 60% of the time with a 0.5% return. 3 months out, we're up 80% of the time, as we are 6 months out, and the returns show an improvement here. And then going out 12 months, we're up 100% of the time with a nice return of between the low 17 and high 17%. So, yeah, it produces a negative divergence. And we've been seeing that, and it's been building up, and it was more short-term negative. But when you stretch this out and look in the longer term, it's not always a really bad thing. Okay, financial conditions, and this is also pressuring the market. They're tending to get a little tighter here. And when this goes up, that pressures the stock market. And then Bitcoin, we got up to 100,000 with Bitcoin, and then everybody seems to be taking their money out. So that was for a number of years now. I did some videos on YouTube and Rumble that's part of a course that I teach that's still available, but it's 3 or 4 years old now. To get the new version, you have to go to the website. But I would get these comments that people were just imagine, we were at 40,000, 50,000. They're like 100K, 120K. I mean, just throwing these arbitrary numbers out there. And then we saw the big downward move, which washed out all the weak hands. The people that don't really know what they're doing, they got wiped out. And then the institutions came in. We had the ETFs coming in and then took it up to 100,000. But you still have a lot of people that this was their goal. Once we get to 100K, I'm going to sell. And so we're seeing a lot of money coming out of Bitcoin. And global stocks have room to fall should the sell-off extend. Okay, this is looking at a global index right here, and we still have a ways to go to get to the 200-day moving average. We don't know if we're going to get down that far. The US is still holding up better than some of the other countries are currently. And then I went over this in the weekend, but they still included it for Monday's post at IsabelNet, where we're over 3% now with the GDP estimate. And that's positive. We want GDP to be positive, meaning that we're not necessarily going into a recession. The forecasts have us about 2.5% to the upside and about 1.5% to the downside. But again, the takeaway is that these are positive estimates going forward. I didn't spend any time on Twitter. I'm doing other things right now, and it's just gobbledygook that really doesn't seem to matter. But here's the intraday chart. So we did have a lower open. We came down to the daily pivot. It looked for a couple of times like we were going to break below that, but this level held, and then we bounced up from there, went positive, got above the 59.50 level. We never made it up to R1. That's because we saw a pretty wide range in Friday's session. Came back, excuse me, came back down to 59.50 and then bounced up going into the close. And so we closed at the high for the day. We're down just a little bit in the initial overnight session, but most of the action actually took place during the market session where we did start off pretty positive and then we started to drift down lower and then we opened with the cash session, saw the nice move, being able to close at the intraday high. This is still looking positive with the blue line above the red line. Large cap growth intraday has been holding up better than large cap value, even though it bounced back for large cap value on Monday. This is still looking good too. Since the latter part of November, we've been seeing the S&P intraday growth to value ratio continue to go up. It's leveling off now, but even with last week's declines, this ratio has been holding up fairly well, and that could be positive for the market. Our end of day charts had growth up over 1%. Value was up, but quite a bit less. It was up, but up less for the mid caps and down a little bit more for the small caps. So looking at our end of day charts here, we're still having a real difficult time with the small caps. I mean, we're coming into that time of year when small caps should be going up and they just keep going down. And we're coming down a little bit here with the growth to value ratio, but this is still holding up and we're still in an uptrend. And this could be positive for the small caps. Also holding up quite well with the mid-cap growth to value ratio here, even though the index itself has not been doing all that well. This is also holding up well, growth to value on an end of day basis for the S&P. We like this. This is more positive for the S&P 500 and also looking pretty positive here when we compare the growth to value ETFs breaking out and just barely setting a new high with this ratio. The discretionary to staples also still looking pretty good here, and that's another positive under the surface thing that we're seeing with the market. Large cap growth was up almost 1%, never came down to its 50-day moving average, and did bounce a little bit in Monday's session. If this could keep going up, that would help the S&P to go up. Our trend, we're right on top of the moving average. We're negative now because the red line's above the green line, but the red line's coming down, but the green line's also going down right now too. So we're getting a bit of a mixed picture. We would default to negative here because of the red line. Also in the short term, seeing the red line coming down, but the green line's going down, coming down right on top of the moving average. So on a trending basis, we still look more negative based on this chart. We're positive because we're still below the 20 period moving average. It's the 50-day that's turning back more positive and seeing a real drop off in volume, which is not a surprise. The latest reading of this composite sentiment gauge here comes in at 64.21, where we had been up in this red area, dark red. It's really coming down right now. And then the legal insider transactions ratio were more neutral. Excuse me, at this time. Gotta love this. Okay, and then the insider buying ETF just chopping sideways, but still in a longer term uptrend. And I seem to be having a problem here. And I don't edit these videos anymore like I used to because it takes me 2 or 3 hours to do that. So I'm just going to take a drink and see if that helps. All right. Then looking at the ulcer index, we're still above the moving average here. This is another fear gauge showing that fear has been increasing and not coming down as far as this chart is concerned. But we are coming down and we're below 20 with the VIX. The line chart is the closing value. We're coming down to the moving averages. A little bit above the moving averages here when we look at the bar chart. Also coming down, but still slightly above the moving average with the VIX of the VIX, which measures the volatility of the VIX. And we're rolling over a little bit with the MACD, but the momentum for the VIX is still up. Since we saw that really big upward move last week, it's going to take a while for that to switch over and have the momentum go down if we continue to go up. And here's the seasonality of the VIX, which should be going down, but last week it really went up. And we're still getting a high reading with the skew index, which is a variation of the VIX. It's coming down though with the up day. So maybe the big move the market is expecting is an upward move since we've had a couple of up days and this actually came down just a little bit. And we declined with this one fear gauge. Actually, we were up just a little bit, just barely a tick up here with this fear gauge. And we were down with this other fear gauge. So a little bit of a contradiction there. Still looking at the risk on to risk off ratio. This continues to go up. That means folks are willing to get into stocks. And if this can continue to go up, that would be more positive for the S&P. We're declining with the daily chart of the equity put call ratio, and we're back to declining with the 5-day chart and below this red line, which is an extreme reading here. Now, we could still go lower than this, but this is where we just want to be a little aware that sometimes this is when this bottoms out. And when we're going down with the 5-day, that's more positive, and we're also back to slightly declining with the 10-day. So that's more positive as well. And we saw a real drop here back into the middle of the range here with the volatility risk premium. So we're getting a contradiction with some sentiment gauges. We're seeing it dropping off and the VIX coming down and the volatility risk premium coming down as well. So the fear, at least after Monday's session, is starting to come out of the market. We're wondering if that can continue because that would be more positive to see the fear decrease. Our advanced decline line studies are improving here. We had that huge up day on Friday, both based on price and volume, and so we're continuing to go back up. with the advanced decline line based on price and volume. Longer term, we're still positive because we're above these advancing moving averages. And didn't see a real expansion of the new highs, but we saw a bit of a contraction of the new lows. However, we're still going down with the 5-day and 10-day chart, and we're getting below this red line here, which is more negative. Uh, Previously, when we hit this low level, that ended up being a bottom. We don't know if it's bottomed yet. It's actually dropping below that right now. So this is looking a little better, but still negative. We're also improving with our advanced decline ratio, but we're below zero with both the blue line and the red line. So that's looking better, but negative. And we're bouncing up after being extreme with the 19-day advanced decline ratio based on price. We're also bouncing up. We never did get extreme negative based on volume. But since these are both below zero, that's still negative. Seeing an improvement here, turning back up with accumulation distribution, but still below the moving average. And also improving a little bit here with the chicken money flow. The red histogram is coming up a little bit, but it's still negative. The red line, though, is still going down. And so this is still negative in and of itself. But here, this could be a little sign of hope. We're actually starting to bounce up and looking a little more enthusiastic with the bounce here with the chicken oscillator. And this is another smart money indicator. Still negative here with the vortex with the red line above the green line. The red line did flatten out and the green line's coming up a little bit. So slight improvement there, but still negative. And a bit of a bounce up with the cumulative advanced decline line based on price. What's encouraging is we're seeing this going up with more enthusiasm here when we look at this based on volume. And starting to go back up with the S&P 500, and we're seeing a slight improvement with the NYSE advanced decline line. And coming back up and getting above the moving average with the cumulative advanced decline line for the NYSE. Turning back up, it's still below the moving average with the regular NYSE advanced decline line. A little bit of an improvement here with this other NYSE advanced decline line. And a little bit of a tick up when we look at common stock on the NYSE based on price. A little bit more of enthusiasm based on volume. And an improvement here, but still negative with our advanced decline line studies. Turning back up, but we're still below the moving averages with all the indexes. And still declining here with our 10-day average of the highs and lows for the S&P. To get back a little more positive, we need to go back above 50 and then continue to climb from there. One more really positive is when we're above this green line, but we're far away from that right now. Also, we look at the broad market and take a 5-period moving average of the highs and lows. We continue to decline here. We're below zero. And not much of a change with those stocks in the S&P above their 20-period moving averages. We're kind of hoping some kind of a little bounce would happen here after we got to this extreme negative reading. Not much of one. And so here's a study that we look at where we came down below 10. What we need is in a fairly quick period of time, a nice little upthrust to take us above 70. Well, that hasn't happened yet. And you can see another time back in last spring when we had a low reading and then fairly quickly got above 70 and then the S&P really behaved well after that. We're seeing if something like that is in the making right now. And pretty much flat with those stocks above their 50-day moving average in the S&P. And it actually went down with those stocks above their 100-day moving average and showing a little bit of an improvement with those stocks above their 200-day moving average. So some improvements here, but nothing really all that gangbuster, at least yet. This is also showing that the large caps are outperforming the small caps when we look at a ratio. And here's the daily chart. Kind of hard to see things because we're getting ready for the new pivot points to come in January. And that's the cool thing about pivot points. Even though it's a nuisance looking at this chart, we know these well before we even get there based on time and price. So this is something that we can actually know ahead of time. And we're coming back up and getting just a little bit above the 50-day moving average. And I'll have another chart to show there. We're really dropping off in volume to below average. And a little bit of a bounce with our 20-period moving average, but we're still extreme negative. A little bit of an improvement with the 50, and we're flat to slightly up with the 200-day moving average. No longer extreme negative with the Stochk RSI. We're crossing above the midpoint with the Williams percent R, so that's showing some improvement in the short term. No longer extreme with the CCI 14, but we're still extreme barely here with the CCI 20. And nothing's extreme on the stochastic chart. That's strange. Usually this is on our list no matter what happens. But in the short term, after the last two up days, looking positive in the short term. After being extreme negative, we're turning back up in the intermediate short term, but we're still continuing to decline below the midpoint in the long short term. And starting to turn back slightly positive with the force index and coming in just a little above the midpoint. Looking at the condition of the short-term trend is measured by 20 periods, a double and triple exponential moving average. We're still below these lines. So the blue line and the green line continue to go down. If we can get back above these lines, that would turn things more positive there. And we're still below the simple and exponential moving averages. So that's why our short-term trend is still negative. This is a long-term rainbow. I usually show this in the deep dive video, but since we sliced through the rainbow pretty quickly, we're starting to come back up, but we're not up to the top end of the rainbow yet. And coming up, but still slightly below the midpoint with the standard deviations chart. So improving, but negative. Intermediate term, a little bit of a tick up, but still negative with the balance of power. Still negative with the go, no go. They're registering a no go right now. And a little bit of improvement, but still below the midpoint with the lowest low value after declining. The TTM squeeze continues to go down. That's negative. And we're showing that standard deviation over the last 10 periods, which measures the speed of which we've been moving, is still quite high because it's still figuring last Wednesday's move into the equation. Turning up a little bit, but still negative with the ease of movement. And we're negative with the Arun. We drop below zero with the oscillator. And this is an improvement here. We're actually no longer extreme negative with the S&P McClellan oscillator. We're still below zero, so it's negative, but this is showing an improvement. But we're still going down. Since the McClellan oscillator is negative, the summation index based on price it continues to decline, actually slowing down a little bit here based on volume. We'll be watching that to see. Sometimes volume will lead price when we look at this chart. Also improving here with the NYSE McClellan oscillator. No longer extreme and bouncing up, but we're still below zero, so we continue to decline with the summation index based on price and volume. This is also encouraging and showing an improvement with the Swenlin trading oscillator. We had become extreme negative and we're bouncing back up based on price. We're also turning back up for 2 days now based on volume. Momentum, though, is still negative. The PMO is below its moving average and declining. We're declining based on price and volume. We're improving here with the PMOs that are rising, but we're still extreme negative. The buy signals continue to decline, even though it's slowing down, and we're still declining with the PMOs that are above zero. Momentum in the short term is negative. Momentum in the short to intermediate term is also negative with the MACD. So all of our oscillators are now going down in the short, intermediate, and long term. The copied curve, another momentum oscillator, is still negative, and a little bit of an improvement, but more in the neutral area here with the Sean trend meter. But this is a little more positive since it's going up rather than going down. We've actually turned back positive with the money flow. We've crossed back above 50. And we're improving with the ultimate oscillator, but we're still below 50. And since we had the up day, we're going up with on-balance volume, and we're still above this advancing moving average. And showing an improvement here with the RSI 14, which is intermediate term, just barely under 50. Improving here with our short-term RSI based on 9 periods, but we're still below 50. And the condition of the intermediate term trend, we're still below the red line and the blue line here. So this still looks quite vulnerable right now. But when we look at this with the simple and exponential moving averages, we were able to close back above this. So that's what's turning our intermediate term trend back to positive. And here's the intermediate term rainbow where we came down into about the middle area and we've been bouncing up and we're back above the rainbow again. So that's showing an improvement. And so we're still below the 20 period moving averages and now above the 50 period moving averages. And we're still neutral with the Elder's Impulse system for the S&P, still negative with the parabolic SAR since the dots are on top, and not really improving much here with the bullish percent index. We actually went down, but during the day it ticked up a little bit, but we're still below this moving average, which is probably really hard to see, and we're below 50. So this is still negative, but possibly a little bit of an improvement there. And we're also declining below 50 with the NYSE bullish percent index. We ticked back up, but we're also below 50 with the NASDAQ 100 bullish percent index. And here's the little mini rainbow. This is a 20 period simple moving average of the open, high, low, close. The reason I have this here is if we continue to go up, one of these lines may act as overhead resistance. And we're showing a little bit of improvement with the Ichimoku cloud. We came right down to the cloud in Friday's session and we're still above it. But we see the blue line and the red line, even though it's really hard to see, they're almost on top of each other. A little bit of an improvement upwards with the green line here. So improving, but not a real vote of confidence, at least yet. And I've been also watching this, the trend channel. We came right up to the high end of this trend channel, and that's when we started to decline. We're wondering if we're going to be able to get back up to that level. And we're turning a little more positive here with the Heikin Ashi. We have an open candle, and we're negative with the Kegi chart since we're red, but now we're pointing up. So that's showing an improvement there. But we're still negative with the Renko chart here since we have the red blocks, and we're also negative with the three-line break. So getting a mixed picture with our different ways to study the trend. Long term, this is the long-term rainbow here, where we came down into the upper end of the rainbow, and now we're back above it. So longer term, we're also seeing an improvement here, and a little bit of a tick up with our 150 and 200 period moving average studies. This is another thing that we're watching, the ZWAG NYSE breadth thrust. We came down and had a really negative reading here. We've now crossed back above 40. So now, within 10 trading days, we need to see this go up to the red line, and that would create what's called a ZWAG NYSE breadth thrust. That means we bottomed and we're skyrocketing up out of that. Other times when that happened, you can see what the S&P 500 did after that. It performed very, very well. So we're just going to wait to see if this is actually going to develop. We're positive in the short term with the Nasdaq 100, but all the other indexes still remain negative. And we're negative across the board with bonds based on price, and commodities are also negative. And we had three sectors that ended up being down: industrials, materials, and staples. And these have been little weaker areas. We like that staples are going down, that's more defensive. And we want growth to outperform here. And tech ended up leading things to the upside. And that's also a good thing. Communication was up over 0.5%. That's another positive thing. Where discretionary was up 0.3%. So no real gangbuster day, but showing some improvement. And we saw a couple of positive things here with the NASDAQ getting above 19.6 and then 19.7. And then later on, energy, which has been under a lot of pressure, it had a BPI cross below 30 later in the day. We read that from the bottom up here. And seeing a little bit of improvement when we compare the weighted version with the equal weight version of the S&P 500. Also, we're continuing to go up here. That means the weighted version is outperforming when we see this ratio go up. The Dow was up 0.16%, was able to get back above this S1 pivot level. So at least this support level seems to be holding here, but we're still below the 50-day moving average. And we are continuing to be neutral with the diamonds when looking at the Elder's Impulse system. The NASDAQ doing a bit better, up almost 1% and getting back above this R1 pivot point. Never came down to its 50-day moving average. So this has been holding up better. Also up over 1% with the NASDAQ 100 getting back above this R1 pivot point, never came down to the 50-day moving average. So this has been one of the stronger areas of the market. And we've gone from negative to positive with the Elder's Impulse system for the Qs. But the momentum for the NASDAQ 100 is still negative. The PPO continues to go down. But we were able to get back above the 20 period moving average here. So this could be leading things higher. Now we don't see it yet in the S&P, but we are seeing some potential signs. Now we need to see more follow through with this. Small caps just continue to go down. They weren't down very much, but they were still down, and they're supposed to be magically going up, but no, not right now. And we look at the Russell 2000 small caps, we're still getting a really extreme negative reading with the RSI. Below the 50-day moving average, the momentum continues to be negative. And we've gone from negative to neutral. Yeah, figure that one out, even with a down day, with the Elder's Impulse system for the small caps. Mid caps up a third of a percent, still below this S1 level, still below their 50-day moving average, and have gone from negative to neutral when looking at the Elder's Impulse system. Been watching this because we're not seeing an awful lot of strength that we were seeing earlier. This is the bank ETF. We were up 0.2%, but we're still below the 50-day moving average. But longer term, we're still in an uptrend. And then that ties into the financial sector, which was up 0.24%, coming back up to its 50-day moving average. So this could be showing some signs of improvement as well. The financial sector is another area. When it does well, the overall market does well. The Wilshire was able to get back above its 50-day moving average, a broad market measure. We're also climbing back above the 50-day moving average with the total US stock ETF. The FANG index was up 1.28%, not to an all-time high, but this was the stronger area in the market. And these are the mega caps. And we're still wondering if we can get back above this short-term trend line here. If we get close to that, I'll extend these lines out. Apple was up 0.31%. Amazon was virtually unchanged, but up 0.06%. Microsoft was down 0.31%. We're up almost 2.5% with Meta, still above its 50-day moving average. Google was up 1.68%. Tesla was up 2.27% after it had been seeing some pretty intense profit taking. Nvidia was probably the strongest of all the stocks. It was up 3.69%. And when I mean all the stocks, I'm talking about the Mega Cap 8, Magnificent 7, Illustrious 11, whatever category you use. But we're starting to come back up to the 50-day moving average. And semiconductors had a pretty good day, and we're watching that. And Netflix was up 0.25%, still looking pretty solid there. And overall, we've been seeing a general improvement in the short-term relationship between US stocks and world stocks. Longer term, the relationship or correlation continues to improve. But you can see we're going up here with the S&P. World stocks are going down, and that's why it's wreaking a little havoc in the short term. And this is the semiconductors. Now, this is the positive side of the scenario. We're coming back up to the 50-day moving average. We were up over 3%. But we've been bouncing all around here like bumper cars. We really need to see this breakout and continue to go up. But so it's improving, but not turning drastically positive yet. So this is positive, and we're coming up into the top end of the rainbow. And you can see the rainbow looks like spaghetti in here because we've been just bouncing around sideways. Now, the negative side is when we look at the SOX index, we're still below the 50-day moving average, and we've seen a recent death cross here. So this is not a real positive looking chart, and these moving averages appear to be acting as overhead resistance. But when you look at this, we look at the semi to tech ratio, we did bounce back up. But see how we're just jumbling around here? We want this to get some kind of conviction to the upside to turn this more positive. And we look at another ratio between the semiconductors and the Dow, a little bit of an improvement here. If we can get back up to this blue line, that would be even more positive. The dollar continues to be in an uptrend, is getting into the 108 range. And we're going up with the 10-year yield. We're going down with the 10-year based on price. And then we look at the ratio between the Qs, the NASDAQ 100 and 3 to 7 year bonds. We went back up and we're still at the top end of the rainbow. That's positive. But when you look at home construction against the 3 to 7 year bonds, we've dropped down below the 250-day moving average, which previously held as support. We've really fallen down, even though we bounced back up a little bit with this ratio on Monday. And we're still okay here, even though we're declining slightly with the Qs to S&P ratio and the discretionary to S&P ratio. We did turn up a little bit when we compared large cap growth to large cap value. But if you look at the moving averages, this is the positive takeaway right now. We want these to be going up to be more positive, meaning that growth is outperforming value. And with the large caps, mid caps, and we're coming down to the moving average with the small caps. But the moving average itself is still going up. And we declined here with our staples to S&P ratio. The S&P was up, staples were down, and this is more positive when this ratio goes down. So what's the outlook for Tuesday? The definition of the Santa Claus rally, it includes the last 5 trading days of the year and the first 2 trading days of the new year. That'll be from December 24th until January 3rd. Okay. We are still negative in the short and intermediate term, but we're bouncing from being oversold. And you could make a guess. In fact, later on, I say that we're actually turning positive in the intermediate term. So you could make a case for that. And things are looking a little bit better there. And we're not going to get any, I didn't update this. We're not going to get any economic reports in Tuesday's session and then all the crazy geopolitical things going on. And we're going to get durable, yeah, durable goods. Hold it. Did I do that? Yeah, I did update this. Durable goods and new home sales. But didn't we get that on Monday? We got consumer. Okay, things are kind of crazy right now. And then, of course, the market's going to close early on Tuesday, and we're going to be closed on Wednesday. And then we're going to come back to initial jobless claims on Thursday. And here's a look at this. Yeah, see, it says durable goods here. I use one calendar to make one slide, and then I look at this calendar, and they're contradicting each other a little bit right now. Seasonality, neutral to negative with the Dow, neutral to positive with the S&P, so no real edge there. We are positive for the Nasdaq on December 24th, going back to 2002. And then we're in the week after options expiration where we're up 63% of the time and down 37% of the time. And this is more the positive seasonality finishing out the rest of 2024, which it's not automatic, but at least it tends to bode well for the market. Tuesday in 2023 was a flip of the coin, whether it was positive or negative, and it was the least positive day in 2024 so far. This is another look at the positive seasonality finishing out the rest of the year. And then this is comparing the S&P 500. It's 1 year from the election date. This actually goes back to the election. And then this, at the time I was able to update this chart, how the market had been doing, and then what happens a year going forward. And it can be positive. And we're in that positive time, according to Tom Bowley's research from the 21st through the 31st, where we're up with a 40.40.5% of the time here. I guess this is the performance. So yeah, it's positive. And then this is what's supposed to be happening with the small caps, but they're kind of going in the opposite direction right now. We get into December and they should just go up until around March or so, but that's just not happening yet. It doesn't mean it won't happen. It just hasn't happened to this point. They're going in the opposite way. All right, so the warning signs, we are seeing some improvements with our smart money indicators, but they're still negative. Advanced decline lines, improving but negative. And that's kind of the theme right now. And after being extreme with the S&P McClellan oscillator, we are bouncing back up, but we're still declining with the summation indexes. And we're clearly negative when we look at momentum here. And the bullish percent indexes are also negative. We do have a confirmed Hindenburg-Omen. The Vortex is negative, parabolic SCR, the Swenlin trading oscillator, even though it's bouncing up, a couple of days of bouncing, but it's still negative. And we're still negative with our 20, 50, and 100 period moving average studies. The ease of movement is negative, the ultimate oscillator, and the momentum for the NASDAQ 100 continues to be negative. Now, we are going down with our 5 and 10-day equity put call ratio charts, and that can be positive. Growth to value, discretionary to staples, that's under the surface and still continuing to hold up. The money flow has actually gone back above 50 and has turned positive, and we're still positive with our 200 period moving average study, and we did see a little bit of an improvement there. And the financial sector is positive, but just not showing an awful lot of strength right now. And here's the updated chart with the Hindenburg Omen. And there's a 1 day lag here. So this is just as of Friday. We don't have another spike up. So we'll just be watching to see if that happens. So our conclusion, we're short-term negative, but showing signs of improvement. And our list is getting shorter there. We're turning positive in the intermediate term, and we do have positive seasonality with the large caps and growth holding up better. In the short term, we are still negative, but improving. And you could say, if you measure this based on moving averages, we have turned positive in the intermediate term since we're above the 50-day moving average. And we're improving, but we still look vulnerable at this time, where in the long term, we still continue to be positive. Thank you. Have a really good day, and I will talk to you in the next video, which will be prepared Christmas Day, but go spend time with your family and have fun with friends and eat lots of food and watch the video when you have time because we're going to be closed on Wednesday.